Can you explain the high level overview of
Waste, or what they call in Japanese muda. The Warren Buffett quote that I think about a lot of times is you really have to think about. I mean, this is true for anybody. Just where do you want to spend your time? You only have 24 hours in a day.
what is like compound investing?
I think a lot of people can look financially strong when things are good, but it's really about who is able to ride out the storms that are going to happen. You really don't know who's swimming naked until the tide goes out.
Welcome, Mike.
Thank you so much.
You are my first guest on this podcast, and I'm excited to have you here.
I'm very thankful that you invited me to join you.
What did you learn from working at Bank of America?
Sure. I mean, I think going back to college, really, I got interested in investing. While I was in college, I joined the investment club at the college I attended as starting as a sophomore, and that got me really interested, and I think led to kind of the eclectic path that I've been on because I got familiar with understanding at a high level, at least, a number of different businesses, which is kind of what you do when you're looking at uh, companies. And so I got fairly just comfortable with looking at all kinds of industries and businesses and understanding what makes them tick. And I felt like getting into finance right after school was really just the best way for me to build a foundation for my future, whatever direction I was going to go in. And Bank of America was close to, it was based in Charlotte, so it was close to where I went to school. And I was fortunate to get an internship there after my junior year, and then got a full time offer and spent 2 years there in a sort of a rotational program, uh, focused in risk management. So
Wow. Did you like working in the bank? Like, what does it feel working in the bank?
it's funny. I mean, there's a lot of regulations on banks, and there's a number of different regulators uh, that are focused on regulating banks. So at times there's a lot of rigor around having committees and um, risk management type of exercises around every part of what we're doing. So in some ways, it feels like another branch of the government at times. But there's a lot of really smart people, a lot of really hardworking people with really interesting life experiences there too.
So this is like full of our curiosity. Does everyone that works at the bank, I would assume, like, are they like financially strong? Do they, by working at the bank, do you learn how to like use money well to build like your own wealth, or what is?
I think most people at banks probably are pretty financially sound. I think the banks tend to pay pretty well. They have decent benefits, decent holidays. So it lends itself well if you're going to have a long-term professional career. It's also, you're not working outside, so you can work at a bank, you know, for your entire career if you want to. So I think it lends itself well to having a good sort of work-life balance and um, you know, being able to be financially, set yourself up well financially. I would say that it's maybe at times not the most interesting work, depending on where you are within the bank, but it's definitely, I think, just sets you up well if you know the fundamentals of how to manage, your spending. It can be great. But I'm sure there's people all over the country who struggle with, making ends meet, whether they're in a bank or not. So.
Interesting. Um, Mike, after working in a bank, you went to working for the management company.
Yeah.
Um, what did you learn there?
Uh, I learned a ton. I mean, I think the the biggest thing that came from that was continue to ask questions, right? So you spend a lot of time trying to understand at a basic level what a company does, what the valuation is, um, but there's so many questions you can ask beneath that surface level understanding. And so I think to be really good at investing, and I think that really applies to a lot of different types of work, is to ask, okay, what's the next question? You just continue to kind of pull on the thread of the information that you're learning and try to take that, all the way to whatever the logical conclusion that is. So I think with investing, there's no shot clock. There's no requirement to get, there's very few deadlines. So you can do as much work as you want to get comfortable with a decision you're making or investment you're making. So I think that's where each investor has to figure out their own level of comfort with how much work do I need to do before I make a decision.
Mhm. After that, you went into Bandrell Corporation, correct?
Mhm.
Why did you transition from the investment management into Bandrell?
Yeah, so that's kind of where I go back to being familiar with different industries from my interest in investing. Yeah, was familiar with different types of companies. I think at my time at investment management, learned about lean management, which was popularized by Toyota,
Mhm.
and learned about public companies that had really adopted that. I think Danaher is really the company that I read about most, and so they have a long history of developing lean management, and so it got me really interested in learning more about it. I read, I have probably dozens of books at home about lean management and how that's done. And I think the one, if you were going to read one book about lean management that connected with me sort of as an American audience, was Better Thinking, Better Results by Bob Emiliani. And it was talking about Wire Mold Corporation and Art Byrne, who is still alive and is still very active in the lean community. And it just got me really interested in this idea. I think what it connected for me was this idea of you could be an investor, you could be a passive investor in a business, but you can also take what you know from lean management, and you can actually implement strategies in the operation of a business that create value for your employees, for your customers, ultimately your shareholders, and then it can create this cycle where you're doing that on larger and larger scales. And I think just connected the idea of operating a business with being as good of an investor as you can be. So that's what kind of led me into wanting to test some of those ideas and thoughts out, and at a company like Fondrel, which is manufacturing paper towels and toilet paper.
I actually have in one of the in the bookshelf, like behind you, I have the Toyota Way, and then there's another one called the Go
Hmm.
that I enjoy a lot. It was very easy to read, kind of like a novel style,
Yeah,
but it taught me a lot about like lean manufacturing.
yeah,
And I work in a furniture manufacturer, so I can totally relate to that process and improving that uh, throughput through the plant.
yeah. It is really interesting, and I think what's interesting about a lot. I don't want to go too much into lean because I could do it. There could do a whole other podcast on that, but there's really a human element to running a business and making improvements that you have to consider, and you can't just force improvements to happen in a vacuum without bringing the people along with you. And I think that's the part that gets lost in kind of the American business philosophy relative to maybe more of a Japanese business philosophy. Um, I think that's probably where it's most exciting is when you can get other people to start buying into what you're you some of these ideas and seeing the power in them.
Nice. And then super quick for the listener that is like hearing us today, can you explain for me what is the like the high level overview of lean and kind of like getting from you start producing something to shipping it the fastest possible, kind of like why?
Yeah. I mean, I think at the very foundation of it, it's what is the customer paying you for? What is the customer value? So if you understand what the customer is paying for, whether it's furniture or paper towels or whatever, it's it's figuring out what they're paying you for and then trying to remove all the steps of your process that they're not paying you for. And so whether that's a bloated administrative process to get to, from invoicing people, or where you have a lot of inventory in your production process that's not generating value for customers or for the company. Those are all forms of waste, or what they call in Japanese muda, that you're trying to eliminate. And so you're really just trying to. It's just this continual exercise of what is the customer paying me for, and what are the things that I can remove from the process that the customer's not going to care if it's there or not. So, but that's the part where you bring people along. Is you have to get people to trust you that when you make improvements, that their jobs and their livelihoods are not going to be impacted. So you have to um, you have to find a way to, promise them that you're going to take those improvements and grow the business from it, as opposed to just shrink the business, shrink the headcount at a company. So it's really, I think it's a really interesting, exercise. And I think, that book, Better Thinking, Better Results, again, just does a really nice job of talking about a lot of those elements of lean, which for me is like a really important part of my hopefully future journey in business and investing.
I think that was very interesting because sometimes I think people work in manufacturing companies, but they don't realize like all these lean things to keep in mind that if the business has, for example, a lot of like work in progress, then they are paying for already those materials. So now your goal is, as any business goal is, you have to make money. You don't do anything with like a lot of work in progress. So the fastest you can transform that raw materials into a product that can be self shipped to the customers, and that is when you actually receive the money to keep operating. It kind of like blew my mind, and I think anyone working in any sort of like manufacturing business is like, okay, even if I don't do manufacturing itself, I need to understand what is the goal of my company. So then whatever I do, hopefully contributes to that ultimate goal, kind of like as a unit. If we're a soccer team, it doesn't matter if I'm a defender. At some point, like if we are losing and it's only 3 minutes left, I need to go and like
Right.
up and try to score because that's the goal of my team. So I
Yeah.
think that helps to that holistic.
Well, and I think that like the people who are doing it really well, they take it, it's not just a manufacturing, it's not just tools for manufacturing. There's tools and philosophies that apply to an entire business. So it's a sales process, it's marketing, um, distribution, logistics, all of that. Uh, there's tools that you can use to really help you, because frankly, a lot of the times the problems that you find in a factory may be problems that were created by an engineer or someone who designed a product, and you really need to, if you're doing a good job of it, you're really speaking to your customers, understanding what they're looking for, and translating that back into the design of the product, uh, and making sure that the design of the product is something that manufacturing can do efficiently and do well. So it all works together. It's all part of one system, and when you start thinking about it that way, it really unlocks a lot of possibilities for how to try to make your business more efficient.
Perfect. So if my understanding is correct, right now you're working as a director of management and acquisition, merge and acquisition of car wash.
Mhm.
Um, what is the process of acquiring like a car wash?
I mean, I think it starts with an overall strategy of what type of car wash we want to buy, geographically where we want to be located, um, and potentially even where our operational capabilities are strongest, where you have good managers, good maintenance, etc. Um, so that's the very, top of the funnel, is just figuring out where do we want to be, and then. Uh, in terms of identifying targets, you're speaking with, either reaching out directly, or speaking with brokers about opportunities that may be available in those target markets. Um, and then once you have, an opportunity, live opportunity, usually sign some sort of, non-disclosure agreement, get financials, um, do additional research on the site itself, on the site or sites themselves, visit them, um, try to confirm as much as you can about the quality of the equipment, how the business is being run, try to identify if there's any opportunities for improvement from a pricing or operational perspective. And then try to put that all in the blender to figure out a price that makes sense for the sites that you're acquiring, and then submit an offer, see what, try to get to agreement on the offer. But the offer can be, I think where it gets interesting is, how do you structure the deal to accomplish what everybody wants to accomplish? Does the owner want to be involved after closing? Does the owner want to walk away? Are there other people in management who maybe want to have a role? And so you try to take all those things into consideration, um, in coming up with a deal structure that accomplishes the objectives of both parties. And then from there, once you have an LOI that's signed, you're negotiating, an agreement, whether it's a, asset. agreement or a stock agreement to um, you know really to determine what assets you're purchasing as part of the deal, assets or liabilities you're purchasing as part of the deal. So at a high level, that's that's the process, and then there's a whole separate piece that once you negotiate that agreement, you start really with the integration process of doing deeper diligence on the business itself and how we're going to integrate it, and are we going to rebrand it or not? Are we going to um, are we going to change any personnel? Are we going to add personnel? And you get into that piece of it too, which is a whole kind of separate ball of wax that's I think really interesting too.
So what makes, for example, if you're comparing two car wash that you are potentially buying, what is the difference between, hey, this place will be profitable, between like this might not be the greatest investment opportunity?
Um, I think the first thing is really self awareness, right? You have to understand what you do well um, first before you can understand where the opportunities lie in any sort of acquisition. So that's the first piece, is being able to, I think that's part of being an investor, is being able to understand, see an opportunity where maybe others, don't see one. So that's but I think you try to understand, are we going to be able to operate this site um, better or as well as the current operator? Are they doing anything that we can improve on, or that we think maybe is a key part of the business that we aren't prepared to do as part of a larger corporation? So that there's a lot of sort of puts and takes that go through your head as you're evaluating an acquisition. I mean, for instance, we've visited certain acquisitions where their brand was so unique and they were doing such interesting things with how they were doing, providing customer service or responding to reviews, that you said, it, they're doing such an all-encompassing job with their brand that I don't know if maybe we're gonna, do as good a job of that, because we have a process and it's really good, but it's, you know, it, uh, there's things that they're doing that maybe we're not prepared to do. So that's where I think it's really just trying to understand in the business. Can you find an opportunity to improve whatever on whatever somebody's doing without taking away from what already makes them good? So that's always the challenge too. Is yeah.
That's interesting. And to be honest, before hearing you working on the car wash industry, it never crossed my mind, because I think it's some of a business type that you sort of see, but it sounds a little bit average at first, so it doesn't caught your attention as like the very shiny investment or like business type. But how profitable is like the wash industry? To be honest, sometimes when I drive by like the main roads, you actually start paying attention. It's like three, four like car wash, and like there's days that they're like packed.
Yeah. Well, it can be a very seasonal business. Generally pollen season or right after it snows. Um, those are peak times for the business. It's also, you're very weather dependent. I pay more attention now to the weather than I ever have, being in car wash. So, when it rains, obviously your business is slow, and that presents challenges in the business of how you staff the site when you don't know whether you're going to be busy on a given day or not. Um, I think but the business itself is really good. I do think that there was a lot of capital that came into the business in recent years, and there was some promise of not needing to spend a lot of money on capex, capital expenditures, or maintenance, and that's I think the life cycle of car washes, there is a heavy equipment component, and that equipment needs to be replaced over, uh, you know, 7, 10, 15 years, depending on how well you maintain it. And sometimes I don't know that that was factored into the way people kind of built their models and understood the amount of capital that needs to be put into these on an ongoing basis.
Perfect. So, um, after working in Bank of America, um, investment management, Bandrel, and now in the car wash industry, if you are looking back and kind of like connecting the dots of your unique combination of like jobs.
Yeah.
What did you learn about like finance?
Um, I mean, I think, I mean, I've always been somebody I felt like who was interested in seeing the whole picture, and that's not necessarily true of everybody, but um, I think that's where, for me and the way I think about my future is the ability to, is hopefully I'm able to get involved in identifying opportunities operationally that have the ability to create value, which then, you know, allows me as an investor to go in and take the cash or the investment value that we identify and put that into other interesting things, and hopefully, over time get into a situation where I can build something that's really, um, interesting and reflects, kind of my own unique interests in combining those two things. But it kind of reminds me, I mean, the Warren Buffett quote that I think about a lot of times is, you're a better businessman because you're an investor, and you're a better investor because you're a businessman. And that's been one of those things that sticks in the back of my mind when I have this sort of eclectic career that I've had.
And now that you mentioned Warren Buffett and investing, let's go into that topic. So, general question: do you think, in general, that everyone should be investing on stocks?
I think that I think that investing is an important part for any person's long term. And I do want to caveat none of this is investment advice, but uh, it I do think that stocks are a really important part of any person's investment portfolio. Whether you need to buy individual stocks or whether you would be well served by an index fund is really maybe more of a personality preference. I think you can have a very full, long and fulfilling life without ever owning a single stock. So there's a great argument for saying focus on investing in index funds and do other things that you're interested in, develop other skills or talents or interests, and focus on being as good at your career, which is what people are paying you to do, as possible. So.
So, I know on the book, actually, right there, I have the book, The Intelligent Investor of Benjamin Graham. And one of the ideas he shared is that only a small part of individuals that do trading of stocks actually makes money. And his
Mhm.
advice, if you are the average person, you perhaps don't have the time to do all the research that you should be doing before you jump into investing.
Mhm.
And he suggests going into index funds, ETF, or at least not individual stocks.
Yeah.
Why is that advice for like the general? Why he says that to the general person?
Well, I think I think you really captured it um, and I can appreciate this now. I have a young son and expecting another child. Like, life gets busy the older you get. And so you really have to think about, I mean, this is true for anybody. Just where do you want to spend your time? You only have 24 hours in a day. Are you going to be able to be really good at your job, be a good parent, be a good son or daughter, all those things, and also spend a lot of time investing? And um, I mean, I think like the research shows that most people are not very good at it, and I think I think even investors who take themselves seriously will find that there's days, weeks, months, maybe years where they feel like they're not a very good investor either. So it's an interesting journey, and I think that's what's I think intellectually stimulating about it to me is the journey and the learning piece of it. But it's not without kind of risk of that you're going to underperform indexes, or risk that you're going to find yourself 10 years from now feeling like you wasted a lot of time when you could have owned index funds.
So if I do, let's say I do go into index funds, how does it work? Should I expect like my profit next month, next year? Like
Yeah,
what
that's
is my plan?
it's a great question. I mean, I think what's really interesting is it's a long term game. And I think back of there's this parable, I think, of a king a long time ago who had a warrior that conquered a city or something, and he asked him, what do you want as your reward? And he said, and he said, I want to have grain of rice and I want it to double every day for 30 days. And the king agreed to it, not really understanding what that meant. And the person ended up receiving a huge amount of, that ended up being a huge amount at the end of 30 days. So you really have to think long term. You have to think exponentially. You have to understand, how exponents work because that to me is just, when you think about it over a multi-decade investing journey, when from the time you're an adult to the time you retire, it can make a huge amount of difference if you just stick with it over time versus being in and out of the market or trying to be overcomplicated with it. Just the time in the market is probably the biggest benefit you can give yourself, and it's kind of free in a way.
So can you explain really quick for the listener, a sort of like simplified overview? What is like compound investing?
Yeah, I mean, like compound interest is really the idea of, if you have a 10% return, if you stack a 10% return on top of a 10% return, so if you have a dollar, it's equal to $1.10. After 1 year, it's equal to $1.21. And so when you play that out over a long period of time, you find that that dollar ends up being worth multiples of the initial dollar that you put into it. And so it's, um, you know, especially if you're investing at a rate above inflation, you have the ability to kind of maintain your living standards or really improve your living standards relative to if you just consume that money when you were saving it or when you originally received it. So that's really what I think your goal as an investor is to maintain or improve your living standards over time. And, um, that's compound interest is really just that stacking a gain on top of a gain on top of a gain over and over again.
Interesting. Thank you for that. Mike, another question. So on that book as well, I don't remember what exactly. I think chapter one, two, it has like a great like analogy, and it says that any investor, or at least any intelligent investor, what they should do is have like a sort of like a card where they are only allowed to do 10 trades or like buy only 10 stocks on the entirety of their life. And basically, once you use those 10 stocks, that's kind of it. And it portrays like that should be the mind of any intelligent investor.
Mhm.
Um, but what I see now in the current world is stock investing, it's almost like gamified.
Mhm.
Can you compare like why the two views, why Benjamin Graham suggests that analogy and like the gamification of like stock trading today?
Yeah, I mean, I think when you step back and think about the way that the world works, is it's kind of cyclical, and what that generally means is that you're not going to have opportunities. There's not going to be great opportunities to make a lot of money all the time. So you either you either sit and wait for the really good opportunities to put a lot of money into them, or and this is maybe more consistent with index investing, would be you just invest along the way consistently, so you catch the ups and the downs, and throughout a long of your investing journey, you'll do well. You'll do just fine. You'll get basically the average return. But when you have people who are trading in and out of stocks rapidly, there's costs, there's transaction costs of doing that. One, which is probably the most obvious, but and even though someone might say, well, Robinhood, there's no actual cost of trading. There's a spread that Robinhood earns on every trade. So there's certainly a cost, even if it's not visible to the average investor. And I think that there's people who are really have to step back and think about whether they're really good, like how often there are really good opportunities, and whether you're as an investor, and some of this is a personality trait of, are you really chasing the latest thing, or are you trying to understand what where the next thing is going to be coming from? And that's really challenging to do. It's challenging to see the future, and that's again where you have to, as an investor, be humble about your own abilities to do that consistently. I mean, it's you may get it right every once in a while. You may have um, picked Nvidia stock and done really well with it, but are you going to pick the next winner in the next industry? That's I think it's challenging.
So if you handle investment for other individuals,
Mhm.
so you're like an investment advisor. How do you determine if a company, a public company, it's a good investment or a bad investment?
Um, I would say I generally try to have a list of companies that I'm interested in, and just because I'm interested whether I think they have good management or whether I like the industry they're in, which is candidly probably more commonly the case than I think their management is great because management does change fairly frequently. So if I like the business they're in, I like kind of the strategy that they've articulated and hopefully executed on over a period of time. I'm really watching those companies that I like and then trying to identify times when something maybe temporary, in my opinion, is happening to the business or to the which leads to something temporary happening to the stock price that I feel like is going to get resolved over the course of a couple of years. And so that's generally a good time for me to build a position. And how long I hold a stock is generally just a function of how what I see the long term opportunity in the business being versus whether I think it's maybe a short term, relatively short term dislocation in a company's stock price that I otherwise you know, don't think is a great company long term. But you're really, I think, just trying to see through the noise of a business. And there's cycles that happen. COVID was a huge cycle that happened in the investment world where some people were stuck at home. They were buying things for their home. They were buying furniture. They were buying homes with interest rates where they were at that time. So there were all these things that were going on that where people were able to charge astronomical prices for the goods that they had. That um, you know, we're still seeing that probably 5 years later. We're still seeing businesses kind of going through the after effects of that. So that's one instance of trying to see through a cycle, see through what's temporary versus what you think is permanent in the business.
So if I wanna, let's say I want to invest, I'm trying to determine like a company if it's good or not. Where do I get that information to begin with?
Um, so the SEC website has all publicly traded companies filings. So um, that's where you can find them for sure. And then there's services that are usually pay a little bit of money to get them, but there's also free services where you can find that information that's been compiled in a way that's easier to understand. But um, I would always point people back to the SEC filings and reading those themselves versus reading things that are compiled by others.
So basically, I shouldn't trust social media too much what they say and kind of read the annual quarter reports, see their numbers.
I mean, and I do think there. I mean, you know, Warren Buffett would tell you, read a decade worth of annual reports. I mean, there's absolutely value in what's in the annual reports, and so I don't want to minimize that. But you do have to, in order to understand a business well, you do have to go out and see how they're doing business, how their customers view their product, all of that, and that you just cannot get that from the annual reports. The annual reports are designed, um, I think, in some ways to obscure a little bit about exactly what a business does or where it makes its money because they're required to produce those reports, and they don't necessarily want to give away competitive secrets about their business relative to their competitors. And that's where I think when we work in a real business, a manufacturing business or car wash, you see how you see how the businesses operate. You see where the differentiation is between competitors, and you realize that none of that stuff would ever make it into an SEC filing.
It's funny because even sometimes for a few companies that you go and read the annual reports or the quarter reports, first of all, they're not very detailed and like precise on what they do, what like estimated like forecast of their future and their industry is. They're like a little bit vague.
Mhm.
But I was surprised a lot of time to find out like not every company out there it's making money, and like a lot of them sometimes do run under like a few years of not making profit, which sometimes like the stock price doesn't reflect that necessarily. So I found it funny when you just see people talking about like the hot stocks or what should you be investing in the next 5 years, and then even if you do a tiny bit of digging into those reports, I don't think sometimes you need a lot of math to just say like, well, we haven't made money in like many years, and nothing so far is hinting otherwise.
Yeah, I would say that on that front, I think about software businesses have become much more, I think, well understood in the maybe the popular imagination, whereas they were um, maybe more of a specialized understanding in the past. And I think they still are to an extent, but uh, I think that sort of the investment community overall has come to appreciate that companies can be creating value a long time before they're actually profitable on a gap basis. And so you should be willing to, if you're understanding the business at its basic level, whether customers like their products and whether customers intend to buy more of their product, uh, there's actually can be great opportunities out there when you're buying companies that are maybe unprofitable currently, but uh, have a product that people are going to want long into the future. And I think Amazon was probably the best example of that, where they didn't generate a profit for a long time, but you could see that um, you could see that clearly they had services that people were interested in. You can even go back to as far as Walmart. Walmart didn't generate. Walmart went public in the 1970s, if I remember correctly, and they didn't generate. Now this is not profit, but they did not generate positive free cash flow until the early 1990s. And so, um, I think you have to, as an investor, sometimes you have to step back and even if you have sort of filters or rules that you like to follow about a company generates a certain amount of cash flow or net income or whatever, you really have to step back to, or is the business desired and appreciated by its customers? Is it likely to be appreciated and desired by more customers in the future? Um, I think there's opportunities in identifying those companies that are doing that at a really high level.
So if you have to give like one advice to persons like the average person, what would that investing advice be?
Uh, Start early. I mean, that's certainly the easiest one is start as early as you can. If you are a parent, I would say try to explain some of these things or get your children interested in it as early as you can. Because I think the earlier you start, it's a longer compounding journey that you're able to go on. So I think that's probably the biggest one. But then it's find a way to save that extra $10 or $100 a month, and um, you know I wouldn't tell anybody to make any sacrifices that they're not prepared to make, but I do think that when you understand the power of investing over a long time period, it makes it really, you know, it makes you weigh your current decisions and what you currently spend money on a lot more versus, what you could have several, decades from now. So, yeah.
Anything I should be like worry or like pay attention to or not do?
Well, I mean, sometimes I think about, you don't want to incur debt, certainly at high rates. Credit card debt would be probably the biggest no-no because, um, the rate that's the interest rates that you're going to pay on a credit card are in excess of 20%. They're probably close to 30% with interest rates where they are now. And there's not an investment on the planet that's going to get you a 30% return reliably. So if you find yourself in a place where you have credit card debt, that's the best investment that you can make is just paying down your debt. Um, Not all types of debt I would necessarily give that advice to, but if you're able to, I mean, sometimes if you're able to get a mortgage at 3% or 4%, like people were able to get in the past, I would. That seems like a really good deal if you're able to borrow at 3 or 4%, and the money that you would otherwise put into your home can be invested at 8 to 10% in the stock market. That's a really good trade where you're making 8 to 10% and you're borrowing at 3%, and it's fixed and it's long-term debt, where the debt's not going to be called on you at some inopportune time for you. I think debt can be a great tool, but you just have to understand the terms of the debt that you're taking on and whether that debt is structured in a way that's going to be a good tool for you or not. And some of the things like credit card debt are absolutely it's a way to destroy money for you.
I believe. Um, and another question: what if, for example, I just finished college, I went to grad school, I have a student debt, a decent amount of it. What should be my thinking in terms of, do I pay my student loan debt? Should I start like investing, even if it's on index funds and it's like long term? Which one should I go for?
Um, I want to caveat first that I was fortunate to not have student debt, so I'm talking maybe theoretically as opposed to having lived through it. But I mean, I would think about it in the same way that I kind of described, where if you have student debt that has a rate of 4%, right? I would continue to pay down the debt and pay it down. But if you also have if you're saving additional money elsewhere and can invest it, I think it doesn't. It's not a bad idea to invest it while you pay down the balance on your debt at the same time. Um, you don't need to be in a rush to pay down a 4% note. Whereas if it's 8 or 10 or higher than that, then again, you're not going to be able to find, in the stock market, you have to take risk to get the 8 to 10% return that people expect. Whereas paying down your debt, whether it's student debt or credit cards or whatever, it's a risk-free return for you. You're able to get that. You're able to by paying the 10%, by paying the note off, you're reducing, the need to pay 10% on that in the future. Um, so yeah, it's the same thought process of comparing what I can earn investing versus paying the note off. What the interest rate on those two assets and liabilities is.
Perfect. And Mike, I also know you are a real estate investor. You own a few properties.
Yeah, I do.
Um, from your point of view, from your opinion, why should I, or anyone, why real estate is a good investment?
Um, I I
If it
think
is.
I think that real estate is. I think real estate can be a great investment. I think the ability to take on, kind of piggybacking on the last conversation we had of around paying down debt, you have the ability to sometimes borrow to buy real estate. So it allows you to get control of a larger amount of assets than you really could doing other investing activities. You do get to control the process, which I think, depending on your personality, sometimes investing in the stock market can feel maybe boring. And so, if you have the desire to get hands on with your investments, then real estate can kind of scratch that itch for you. At the same time, right, I think, I'm saying already really that real estate's not a passive investment. You're not, with the exception of a few types of real estate, there's really no such thing as mailbox money that just comes to you reliably every month without having to do any work or spend any money. So, um, I think that it can be a lot of fun. There's opportunities that you can identify in real estate that maybe, uh, you know, other other investors, larger institutional investors, may not be able to identify. And there may be more plentiful opportunities there versus investing in public markets or trying to buy small nano cap stocks. So I think that it can be really really good, but you also have to be willing to work. It's not going to be a passive investment. So it kind of goes back to the earlier comment around being an active investor. And in real estate, you're very much an active investor.
So wait, because you just like busted one of like the dream bubbles that sometimes you hear like invest in real estate, then it's like passive income. and it sounds like everything's so nice
Yeah.
and easy. What is like the actual reality?
I mean, it's. I mean, there's certainly a lot of work when it comes to having tenants, depending on there's things like triple net leases that where it is closer to kind of mailbox money, but uh, you do you constantly needing to maintain your assets to ensure that your tenants are going to continue to want to rent from you, and future tenants are going to want to continue to rent from those locations. So that's really the challenge is that it requires these are without investment, every structure or building is a depreciating asset. So you constantly need to invest in the asset, and occasionally you're going to need to go back and kind of on a more significant basis refresh the investment to make it more attractive to the current market environment. The assets, what may have been interesting or visually appealing in the 1980s or 1990s may not be visually appealing today. And so you have to meet people where they are, what they're interested in today.
So what is in real estate right now? What do you think it's like a good investment? Is it like any type of property that I go and buy will be good?
Well, there's certainly I think this is a really interesting time in real estate because of the recent change in interest rates from the early 1980s until a few years ago. Interest rates basically did nothing but go down over the long term. So there were a lot of people probably in real estate that made lots of money really from interest rates, from being able to roll their debt from 5% down to 3% or from 7% down to 5. Um, Really didn't necessarily improve the assets they acquired. So today, in order to generate value, you have to improve the assets that you're acquiring. You have to have a plan to improve them. So it kind of goes back to some of the earlier comments around, acquiring businesses or investing. You have to have a thesis, and you have to have a plan to spend money on the assets you're acquiring, and understand what increased rent or higher occupancy that's going to generate for you. You can't buy a building at 98% occupancy and say, "Oh, I'm just going to hold it for 5 years and my interest rates are going to go down and then I'm going to be able to earn a 15 to 20% return." It just that you know that was a reality for people coming out of the financial crisis, but they have to you have to really earn your keep in real estate in today's world. So that's what I'd say there.
And then if I, let's say, okay, I'm sort of willing to be an active investor, invest in real estate. I like it because it's like tangible. I can see my investment, and I am willing to go and do the work. What what advice will you give me?
I mean, I think really it comes down to understanding the type of asset that you're acquiring fairly well. So it would be try to find mentors who have been there, have done what you want to do, have experienced some of the headaches that you may find yourself experiencing, and try to learn vicariously from other people as much as you can. Um, and then I'd say figure out a structure, an investment structure that makes sense for you and your personality. So, are you more of a lone wolf? Do you want to own 100% of the assets that you buy, and maybe you buy smaller assets and build up over time? Do you prefer to buy larger investments, but that will require you taking outside capital and being kind of a general partner with limited partners that are providing you capital for a return? Um, those things are all, I think things that you want to think through about how you want your life to go and how comfortable you are bringing other people along with you. I think everybody has a different personality. Some people are maybe even enjoy having limited partners who they can kind of bring along with them and go on that journey with, and other people prefer to own assets directly themselves, and they don't necessarily want to have um, other people along for the ride, or they want to kind of build their empire slowly and do it on their own. So I there's no right or wrong way there, but I think it's good to be reflective of your personality and figure out what your you know what makes sense.
So if I do invest in real estate, like what is kind of like the cycle of what should I expect when that will like be paid back or when I will start making money?
Um, I mean, it's very investment dependent, but and it depends on how much debt you take on. So hard to answer that in a vacuum, honestly. But I think, I mean, generally speaking, you should be able to, if you buy an asset, you make improvements to it. Uh, you, you should hope to have significant cash flow within the first year of doing that. But that goes back to um, it goes back to having partners who understand what this, having lenders and also having investment partners along with you who understand that you're not going to get cash flow day one, or and I think that's really the challenge with today, with investing today versus in the past. Was in the past you could buy a stabilized asset, it's going to generate cash flow on day one. We're going to refinance the debt in a couple of years and at a lower rate, and it was a really clean, easy to understand thesis. And how could it ever go wrong? Well, interest rates increased, and now the debt that you were going to refinance from 5% down to 3% is now 7%, and uh, you may not be generating cash flow anymore. So I think that having a realistic plan for how you're going to generate value and when you're going to start to see cash flow, and you know having being conservative about when those things are going to happen, just given how the world can change quickly, and you're not able to control all of that.
What was your first mistake on real estate?
Um, I think that was I was maybe lucky for a while that the things I did in real estate worked well, and it was probably because a lot of those things I did early on didn't require uh, a lot of active management. I purchased, to be explicit, I purchased land in some areas that I thought were growing and were exposed to positive trends, and I turned out to be right. Um, but as I've gotten more into operating assets, that I purchased a triplex in 2021, and I would say that that's been challenging, from a variety of perspectives. So the you know finding contractors during that period of time was really challenging. The first contractor that I hired was trying to get back into uh, the business and ended up being not a reliable person, and so I was found myself in the middle of a pretty significant project for me personally, having to change contractors, and usually that costs some money to do it, and it's usually not easy, and that was definitely true for me. So um, I think that goes back to some of the things that I've learned over time, that is, it usually pays to get quality over the lowest cost, and I'd give that advice to anybody. And I grew up where I tried to find the cheapest. It's sort of conditioned to find the cheapest, choose the cheapest option. But I've just found over and over again in my life that the cheapest option usually is not the comes with more headaches than it's worth.
Yeah. What are some of the, because I know it's a lot different if you look from the outside, and I think like, okay, being a landlord might be difficult, but what is like the reality? Like some of the headaches, like the general people don't see.
I mean, I've only done residential investing, so but you have people who leave the shower on, and it floods part of your structure. Um, people who leave the door open, and it invites in, critters or rain. You have people who have unreliable people who come in and maybe they cause a fire in your units. I mean, there's a bunch of different things that can happen, and I've had fortunately not all those things have happened, but um, I think the biggest one too when you're dealing with multifamily is having pests, right? So whether it's bed bugs or roaches or things like that. I mean, if you don't manage that happening at one of your many units, you know, you can really destroy a building that way, cause a huge cost for yourself trying to mitigate those. So there's all the things that come with human beings, the pests, diseases, and things that kind of absent-mindedness that leads to problems. So you kind of have to be ready to respond to all of that.
So it does sounds like they keep you on your toes.
Yeah, I mean it's and I don't want to overstate. Once you have a stabilized building, I mean you know it it's not that you're there every day, but you do have to be prepared to get phone calls at times that are inconvenient for you, and you have to be ready to you know fix problems at just at times that may be not convenient. So
So, Mike, we talk about real estate like as an investment, but then for the kind of like the average person, a little bit like me, we are looking into buying our first home soon. We are still early in our career. We don't know much about like any sort of like property or how to like analyze and determine if a property is good. Um, for the average person, just like simple things that I should keep in mind when I am going and looking at the house to determine should I buy this or not? What should I keep in mind?
well, the first thing I would say is that the home that you live in, you should not consider an investment.
Okay.
So um, that's the biggest thing is you really, I would view it as it's a consumption item. You do need to live somewhere. We all need to have a roof over our heads, but to the degree you're buying more than you need to survive a place that has a kitchen and bathroom and bedroom, that's really a consumption item. It's, if you have a place that has extra bathrooms or extra bedrooms or nicer fixtures and features, just acknowledge to yourself that this is a consumption item. I'm purchasing this because I want a different quality of life, and that's okay. There's nothing wrong with that. But it does at a point become destructive if you're consuming more than you're able to save, and so that's the biggest thing is, and I would say generally speaking, you know, I would advise people to get as little house or as little, real estate for themselves as they can, manage because it's just, um, if you're interested in having financial strength and stability long term, the less house you have or the less you're consuming on your own housing, the more money that you're saving. As long as the extra money that you're not spending is actually going into savings, you're not buying vacations or what have you with it. You're saving more. That money is going into investments. Those investments are earning 8 to 10% a year, and you're going to come out better in the long run.
So then you just told me like the house I live in is not an investment. Um, why do we hear like the opposite message? Sometimes I feel like the kind of like the marketing frame is like this long and it's like your house is your asset.
Well, maybe a better way of it's a forced saving vehicle. So you're paying that you borrow and you're paying down debt every month, and so over time, and your house will likely increase in value. I mean, that's not a guarantee. If you live in a place where the population growth is negative, housing values may actually be declining, and you see that in the northern part of the country, northern part of the United States, in some places. I remember visiting Kalamazoo, and I could buy as many homes or apartments as I wanted to for less than $100,000. So, um, and this was probably 2018 or something. Um, there's no guarantee that your house price will go up, but generally speaking, it'll probably increase in value. But it's not, you know, you just you have to understand that is some level of consumption. That it's not, uh, even though the house will increase in value, you're not. It's not. You're not. You shouldn't expect it to generate some outsized return for you relative to what your alternatives are.
And what are your thoughts about the down payment that I should put in a house?
Well, I think that's. I mean, the to the degree you can put in as little as possible. I mean, I think it's probably you know I think that's a practical necessity for a lot of folks today. Um, what it's what I would say is though, if you put a low down payment down, the home value decreases. That you're going to find yourself without any equity in the house for a long time. So it's it can be really positive as a way for you to get into a house and have achieve some of your dreams for homeownership. But I just wouldn't. Um, I think it can create instability for somebody in their financial life if they stretch to get a house and they they think they think that by having a small down payment they're going to be able to buy more house than they should be getting for themselves.
So let me give you my opinion or my thinking on something, and then you tell me your thoughts. So when you are looking to buy at your first house, you are offered the first homeowner loan, which basically what they say is you put a very small down payment, like a 3.5% or a 5%. But then to me, it sounds that just makes the mortgage payment more expensive. And it, from my point of view, they sell to you as a great opportunity because you do buy a better house that you apparently can afford. From my opinion, that's kind of like a false impression. You are buying something that you cannot really afford. So from my point of view, the first homeowner sometimes doesn't make a lot of financial sense. It doesn't sound too sound for me.
Yeah.
Thoughts on that, even if what I said is like fully wrong.
No, I think you have to. I think you're generally right on that. It's really goes back to owning the house that you can afford long term. Um, I had a family member who made sure to purchase a house at one point they could um, that they could continue to pay even if they only had one income coming in. So I think you really want to think about not just what you can afford today, but think about the different directions your life may take if you're getting married and maybe both both members of the household or the spouses each have an income at that point, but maybe you plan to not have maybe you plan to have kids and maybe one of the parents is going to stay home. And so you'll have one income at that point. You want to think through all those different possibilities of whether you're going to be able to continue to afford the place you're living in with all those different events, or if you lose a job, or if different things happen in your life. So that's, when you think about strength, financial strength, I think it's really trying to think through how do I avoid being in a position where I have to sell something or where I lose an asset is taken away from me at the worst possible time.
And now that you mentioned, um, basically you have to think of your personal financial situation, a little bit anticipate the future, how you're going to handle payments, things of that nature. Let's go into personal finance. Um, just in general, first of all, do you think we live in a world where people in general are financially strong?
I mean, it's hard to say. I mean, I only know the details of my own life, so it's hard to, and maybe a couple of people that I'm, family members or what have you. But um, it's, you read some of the statistics about people, not being, living paycheck to paycheck or not able to afford to do certain things. And it certainly seems like there's not a huge number of people who are able to really be financially strong. And that's maybe, I guess it really just depends on, how you define strong. I mean, maybe another word I would use is resilience. I think a lot of people can look financially strong when things are good, but it's really about who is able to ride out the storms that are going to happen. Again, life is kind of cyclical. There's good times and good economic times, bad economic times. There's war, different things that can happen in any country, and so, you really don't see who's strong until, you see people face some level of adversity. So, um, and that kind of reminds me of another Warren Buffett quote, or is you really don't know who's swimming naked until the tide goes out. So that's, I think that applies here with people can appear strong, they can and I think that's the challenge. That's the trap that a lot of people fall into. Is if you ask who among your friend group or among the people you work with looks strong, it might be the people who have the nicest car, or maybe the people that have the nicest house, or go on vacation the most often. And sometimes, maybe oftentimes, those people may be the most financially weak because they're consuming everything that they're spending, or almost everything they're spending, and they're very dependent on their jobs, and having continued employment in order to afford all those things. So, for me, being strong is what I try to think about is how long can I survive without a job or other things and continue to live my lifestyle, not necessarily have to make changes. Even though I think if I ever found myself in that position, I might make changes. I own some properties. I could sell those in order to, um, you know, continue to live if I needed to. So that there's, and I think that's another maybe suggestion would be to have a contingency plan of understand what you're going to do if plan A isn't working for you. What's plan B, plan C, plan D look like so that um, you just you have a ready to go to plan for that.
So describe to me, you mentioned, I like the word actually, the a financial resilient person. What would that person look like? What would they will have that the average person or the person that is not financially resistant doesn't have?
Um, I mean, I think that the common advice is to have probably 6 months of living expenses available, readily available to you. So I think that's probably at a minimum that's advisable, and then really from there, it's whether if 6 months is the minimum that you want to have. It's really how long could you live without income? Could you live indefinitely without income? Could you survive for 2 years? So, but I think it also brings up another point around resilience. Is I've started thinking more and more about, and I know that you've been thinking about this too, of you know, personal health, safety, having skills that will work for you in any environment. These are things that I've started thinking about as being more resilient because I have a certain set of skills that are more financial in nature. Um, and so, I think a lot about, well, how would I survive in a different version of the world, right? Whether it's AI takes away certain opportunities that maybe I was planning on as part of my career, or things change, like maybe there's a war happens, or there's so many different things that could happen. And so, how do I have all the skills and habits developed in the rest of my life, not just financially, to kind of be resilient to just the different versions of the world that could happen?
So now let me ask you a question. Um, in your personal finances, in your like household, what what do you use or what do you do to like make sure you're financially resistant or like your life makes financial sense? Is there like I know sometimes people suggest budgeting app, have a spreadsheet, look at your expenses, just having like a big rule of thumbs, kind of like what's the system that you use? Like, okay, we are financially good, we are not financially so good.
I would say, I did set up a budget with my wife so that we had an understanding of our our household's expenses, and so we have um, so and that's based on kind of more of an annual review of our spending. So maybe that's the first step is look at your spending over a long period of time, whether it's a year or the last couple of years, and understand where that money is going to at a high level because it's easy to kind of get. I think what a lot of people do is maybe, and I'm subject to this too. Right? Every month you say, "Well, I went to that wedding this month," or I had this one time event that happened this month," or I don't know, I destroyed my clothes in the laundry, and so I needed to buy all new clothes. Like, there's different seemingly one-off events that are happening all the time. And so when you step back and look at it over several months, like you really understand some of those one-time events are much more recurring than you think they are. And so I think that's valuable in terms of setting a budget because that allows you to kind of see some of the miscellaneous, what you would maybe categorize as miscellaneous things and how those affect your spending. But yeah, take that sort of annual review into a monthly budget, and then I try not to personally, over engineer, my tracking of it, but really just making sure I sort of know what my credit card balance should be every month, or I know, and some of the other costs that are maybe more consistent, like I know my mortgage payment, or I know what my childcare costs are going to be. So I'm just looking at those more variable parts of my spending and trying to understand, where the money's going. Um, so that's at a high level, what we do. And yeah, I don't know that there's any rocket science to it. It's kind of just thinking about your life like a little bit like a business, and making sure that the income is greater than the expenses.
So I actually like that because your numbers, the ultimate rule of thumb is like you just need to make more money than what you spend. If you're positive, at least we are good. And you do have to plan it like kind of like you are a business because your family is it's that business that's sort of like run and it needs to be profitable. If not, life gets a little bit tougher.
Mhm.
But a business will plan how to use sort of like their money for kind of like the family household or for like the individual. How do you think they should use their money, like kind of like their paycheck? Uh, I know you cannot it always depends in like the specific situation, who you are as an individual, who your household is, the situation that you are in life. But just in broad terms, um, what should I think of? Like, how much should I save? How much should I spend on my mortgage or my rent? How much should I allocate for just having fun and living life? Can you just give me, like, from your point of view, a breakdown of what you think are the important sort of like percentage that you will categorize?
Um, I mean, I think it's sort of personal. It's some of those things are personal. Sort of what your preferences are, whether you want to focus on having nice things or maybe going on vacation, investing in experiences versus investing in things. So, um, I don't want to, state something and sort of say that that's right for everybody, but there's, I mean, I candidly just try to, minimize what I spend on on everything to the degree that I'm comfortable. I probably end up, as we're doing this podcast, a little bit overweight, and I probably spend more money on food than other people do. Um, but I think, uh, I think that you really just want to try to minimize it to the degree that you can be comfortable with that life. And we all have different constraints around what our incomes are. So that again is somewhat personal in the sense of, maybe my housing is 20% of my income and other people's are going to be 40%, even if they live in a smaller house than I do. And so, you I don't want to say to anybody what's right or wrong on those, but there's certain rules of thumb around housing where it shouldn't be more than 30% of your income and um, uh, things like that. But I think that you know this is where the academic side of understanding what percentage of your income is should be allocated to certain things is really less important. There's not as much time spent on in the American culture on being comfortable, being different from other people, and I think that you really should. I would recommend to anybody spending time being emotionally comfortable with being different from other people versus where should we be spending money this month? Because I think if you can figure out a way to be emotionally comfortable with, my friend has this, but I'm comfortable with not having that, or so and so has the latest iPhone, and I don't need to have the latest iPhone. When you can get comfortable with those kinds of decisions, um, I think you create like the foundation for being able to make the budgeting decisions that you need to make as an adult.
So my next question is like, what at the personal finance level, what advice would then give, for example, someone that is like starting in their career? I finished college. I'm about in my first or maybe second job. What what would be that personal financial advice that you will give?
I would say to try to live the way that you were living in college for as long as you can. So, if you have a nice fancy job in a big city, I would try to live in the cheapest place that you feel safe doing so. I would, don't feel like you need to go out and go to a Michelin star restaurant every weekend just because you have some extra cash in the bank. I would try to uh, live inexpensively. And I would say that if you do that throughout your life, in terms of when you get raises or promotions at work, if you don't let your increased income drive increased consumption, at least certainly not automatically, I think you set yourself up well to kind of over time sort of divorce how much money you're making from how much you're spending. If you're not saying, hey, my salary just went up 20%, now I'm going to spend 20% more on all the things in my life. I think you get into a trap. Uh, you get into a trap that's hard to get out of if that's sort of mentally how you're thinking about it. And I would just go back to that idea of really like mentally, but really emotionally getting comfortable with not needing to be like everybody else, or not needing to beat the other people in your neighborhood or in your apartment building or in wherever you live, whoever your peers are, not needing to be better than them, or have everything be better than them. So I think that's the big thing that seems like in American society people struggle with.
I love that. That it's I think very like words of wisdom. Mike, if you were to have, I know you have a son, and um, let's say in a hypothetical situation, you were not able to give your son like any money. You can only give them like knowledge for them to be able to in the future when they grow up financially resistant, financially strong, being like having money not be an issue. What lesson will you like give them?
Um, it's a good question. I mean, I think there's some of those sayings that we've talked about in the podcast where you don't know who's swimming naked till the tide goes out. It's really about this understanding of perception versus reality, and that so much of life is perception, and you have to realize that there's an inner reality that you want to be um, you got to be comfortable with. I mean, just as a person, like you have to be comfortable with maybe I'm perceived in a certain way or you're perceived in a certain way, and just have to be comfortable with I'm okay with being the best version of me that I am, and not, not worry about the things you can't control. And perception is something that, it's can be very challenging to control that. It can be kind of a all consuming thing if you try to control the perception of you. So I think that's probably, and that's another thing that, I've described in a different way, but Buffett again, I think is a example for me in my life, and he's talked about it through the concept of an inner scorecard. I think is a similar concept that he's talked about, where he focuses on doing the things that he believes are right and good in his own eyes, and he doesn't necessarily worry about this or the external scorecard, how other people are grading him or perceiving him. So it's kind of a similar concept.
And then another question, again, same. If you have, hypothetically, you have to put together, for example, a library for your son, a library of books. And your goal with this is to prepare your son for whatever the future will be, to be successful, to be happy, to be financially stable, resilient. That is kind of like your ultimate goal, like building this library for him.
Mm-hmm.
And this library has like two sections. One section that is a must read books. So that means this is non optional. You have to read them because they are essential for your success in the future. And then a second section that is kind of like optional. If you want to dig a little bit further, you can go and explore more books.
Yeah.
What are some of the books that you will put in this library for your son?
Yeah. We were talking about this before we got on, and I have a lot of books that are more business or finance related, which I don't know are things that I would give to somebody without any context and say, "Hey, this is going to change your life." Um, but I think some of the books that for me have, changed my life. Certainly the one that comes to the top of mind was reading, Marcus Aurelius's Meditation, which is a book about Stoicism, which has become, really hot recently amongst sort of the social media influencer crew. But I was, I went through a period of time in my life when I was in high school where I probably had some anger management issues. I was a competitive athlete and I wasn't very good at hiding my emotions when things didn't go well. And, I think um, at that time I was searching for a way to kind of control my emotions that was not, based in medication or other things. And so I wanted to just train myself to handle those things better. And that was, meditations for me was helpful in kind of monitoring, sort of moderating myself. And I would say that a lot of stoicism is about not getting too high or too low, and so that's kind of I think um, how I've sort of evolved over time. I feel like sometimes I've got a little bit of a monotone way of talking, and some of that I feel like even comes from that embrace of stoicism, because I just try not to get way too excited or way too down, and I try to like to stay in a healthy, like a you know be relatively steady in how I'm going about things. So meditations or really studying like stoicism in general, I think would be big. Uh, I think really there's a number of like in the business book world. I think really studying like customer service, because I think when you step back and look at like what things in life really matter, it really comes back to serving others. Like you think about what is like why are we doing all the things that we do in life, and what are we really accomplishing? And it really comes back to whether you're serving somebody directly or not, serving the end customer or not, you're serving somebody else, whether it's somebody in your organization or somebody in your life. And so I think if you get comfortable with that idea of serving others, you're really getting to the core of like how society and life can work in a way that's really amazing. And so that's something I don't know that I was exposed to, early on in my life. But I think it's just the more I've the more I've spent time kind of in business and in the world, like being comfortable with serving others and that that's what you're trying to do is that's just like you know really powerful. So, um, but I don't know. Uh, I think there's a ton of financial books that I would I would mention again the Bob Emiliani's book about better thinking, better results. I think that really like it goes back to the idea. I mean, there's a serving others component in that, but it's also about how to build and how to um, I think create systems around you that allow you to kind of build things more than you could ever have hoped for with your own effort. Yeah, I don't know what book there would be out there to suggest that around like how to be a good team player, but that's probably the one thing that I experienced early on. My early life was so focused on achievement, like personal achievement. It was how well am I doing in school? What are my grades? How am I doing on the baseball field? And I certainly cared about team success on the baseball field, but it was really about the way that I achieved team success was about willing myself or feeling like I was willing my team through my own effort to win. I wasn't really building up the people around me. And so I think the idea of like being kind of like that your greatest like leverage is by having other people by like pouring into or sort of serving other people and then getting them to uh, to be kind of the best example of the things that you believe in throughout the world. So that's kind of how you like. I think that's where like the real power of teamwork is if you're teaching and learning and growing together with a lot of other people. You can go way further in life than if you're just trying to optimize your own life for your own personal gains or whatever.
I think that was like a fantastic answer. I couldn't. That was great. To be honest, my last question was gonna be: is there any other like words of wisdom or advice that you will give? What you just gave me was like fantastic, amazing. But is there anything else you would like to add for the listener of this podcast to take home with them?
Um, I mean, I think I would just say to be curious, be humble. Those are I think that's what's great about the podcast world in general is the ability to be curious and be humble and meet people that you don't always agree with or have different opinions on. So I think that's just I think that that's the most powerful thing you can do is just be having the courage to go up and talk to people or ask people questions that you know you are genuinely curious or interested in learning from. So yeah,
Perfect. Well, Mike, thank you very much for being here. Thank you for your time.
thank
Thank
you.
you for sharing all the knowledge that you have with us and with the world, with the people listening this podcast. Um, if you were the listener today, please give it a like, subscribe. I still need to figure out where we're gonna publish this. It's the very first episode, but just let us know your thoughts, and I hope you enjoy this episode. Thank you, Mike, again.
Thanks, Santi.